Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to rip through Twitter, see what people are talking about. A couple of topics I'll be covering: commodity related, finance related, and wealth building related topics that are being shared, at least on my Twitter feed. Again, if you want to follow me, it's at finding_finance, or you can join our community at finding-value.com. We do have a Saturday question and answer session at 7 a.m. Mountain Standard Time. So let's dive right in. Let's see what's going on. So nobody wants to get rich slowly. This is why few get rich in the first place. Few get rich in the first place because they don't have the discipline to get rich. That's really what I think the main problem is. Getting rich is just like building your body. If you're going to gain in strength, at least if you want to do like powerlifting or whatever, it's just going to take time. And nobody is gonna get strong overnight unless they try to cheat the system. They get on steroids, they try to cheat and whatever. Um, and that's the same thing with getting quote rich. You can make money, but you'll just give it back if you don't know how to keep it. And usually it takes a long time to accumulate wealth, and that's how most people do it. They just accumulate it little by little, and it adds up over time, and it compounds. It says if you were in your mid 30s and decide to get an MBA for around $70,000, how much more would you hope to make per year? I don't know if that's the right question. I think that's a bad question, but I mean, I'll answer that question and then I'll give you my opinion after it. But um, I could probably make double what I make if I really wanted to. Like if I really, really wanted to make a lot more money, I could make more money with the degree I already have. If I get an MBA, that would just mean that I could do it maybe faster, maybe not. It's more about connections than it is about having accolades of some sort. And I mean, maybe the accolades do matter to some people, but what I found is it's all about connections. And I think going the route of MBA and doing all this, I mean, you're literally working for these large corporations. There's a portion in those corporations, like certain levels, and it differs based off of where you work, that there's a certain level that they just put in a bunch of hours. And I don't know if the people do that because they want to do that or they feel obligated to work all these hours. I'm not exactly sure. And a lot of them don't really do anything of value anyway. But the way that I view it, uh, I'm not really someone who wants to move up at my current work, and try to make more money, because what usually happens is the hours that people want you to be working go up. So you're gonna have to balance: do I work 50 or 60-hour work weeks to make 20, 30, 40, $50,000 more, or with the potential of doubling my income with time if they allow you into their little clique? Because when you get into the certain levels, it's less about what you know and the accolades that you've got. It's more about who you know, and them letting you into their little clique. At certain levels in a lot of these big corporations, like they've got completely different packages in terms of health insurance, bonus structures, all these things in, like, what we'll call it, like the director plus level. If you're above a director or above a senior director, probably, I'm not sure the exact level where it kind of changes, but at some level it just changes. You get like all different packages and programs. But again, the question is, do you really want that job? I mean, at some of these jobs, you're literally going to be told what to do, when to do it, how to do it. Just go do this, go make that happen. And I mean, you're going to be running around like a chicken with its head cut off. But if you do that, they may allow you into their little clique and their gang or whatever, up there. And you've got a lot of people that basically get to senior level positions, like senior individual contributor positions, and people kind of just give up. They're like, I'm good with this. Those positions, like senior staff level, they'll make like 80,000 all the way up to, I'd say, like 150, 160,000, somewhere in that range. And most people say, this is good enough money. I don't feel like dumping in more effort and time and all this other stuff and be told what to do. and all that. So I would say the majority of people get to that level. And obviously, it's vastly different based off of different companies in different areas. You might be a senior manager somewhere that makes a lot of money, $250,000 plus, or you're at a different company, same title, senior manager, and you only make 130, 40,000 or something like that, depending on how long you've been in the position as well. So do I think an MBA is worth it? No, I think an MBA can easily be learned, self-taught. It's only valuable for those others that are looking at your resume and say, oh, he's got an MBA. I mean, that's about it. The majority of that stuff can be learned quite easily. Now, a master's degree in engineering, that's going to be a lot harder. But again, I don't know if the payout's there. But that's what I'll say. Skip over that. We've got Bitcoin. Something is different this time. So Bitcoin versus silver. It looks like we've got a rising wedge that is broken to the downside. This is a horizontal resistance line that we're at. Not the same as 1 and 2. 1 and 2, where we were in an uptrend, breaking to the upside. It says previous bear markets for BTC ended with this ratio chart above the major support line and 4-year moving average, with no bearish cross of the 1 and 4-year moving average. This is a large bearish rising wedge, which broke down a year ago. So that's what we've got for the Bitcoin to silver ratio, where silver could outperform heading lower Bitcoin. What housing market crash? Question mark. So this looks like the appreciation. We had a little bit of a pullback here, and we're back to appreciation. So this is this big, huge crash that I guess people were thinking was going to occur, and that's what occurred. Not a huge crash, but to each their own. The net worth percentiles of 2020. So top 1% is 11 million bucks. Top 10% is 1.2 million. Top 25 is 403,000. Top 50 is 121, and top 75% is 12.5 thousand bucks. Obviously, people are going to be older in the top 1%. So those are people who are, they're going to be over 50 years old, 60 years old. They had time to build the wealth, time to have it accrue interest and all that stuff and compound. So I would expect a lot of this to be younger individuals down here, middle-aged, and older as you get up this pyramid, so to speak. But yeah, that's that there. Cuppy, I like this one. It says, if Iran oil export rumors cannot hit XOP for more than 1%, we'll have to use SPR release rumors next. John Downs, he says, is housing entering a new phase? Many, include myself, have been talking about pent-up demand, buyers on the sidelines waiting to pounce on new inventory or when rates drop. That could be changing. These past couple of weeks, I've had approximately 20% of my pre-approved buyers stop their search. Their friends, family, and financial advisors said, now is not a good time to buy. Herd mentality is powerful. If the herd is changing its mind, this could have meaningful impacts on pricing in the coming quarter. Of the buyers who withdraw, a large percent were move-up buyers. Maybe that's a good thing, as it will continue to keep inventory tight and thus a floor on values. Time will tell. I'm just making an observation here. I would definitely say that's the case for move-up buyers. I could see a very large percent, and I wouldn't move up right now myself. I'm just going to stay where I'm at. I mean, I bought a house big enough where I can stay here for a very long time. There's no need for me to change because, again, moving houses it incurs transactional costs, and I want to reduce transactional costs and maximize and minimize my expenses, maximize my value or wealth. So I don't want those transactions. But for a move-up buyer, I would not be moving up. There's no need for me to move up either. But I would sell and go somewhere else to eliminate my mortgage. might be an option that I would ponder or consider. Going from a high cost of living area to a lower cost of living area and just owning the house outright. I could do that. But I will say, I would love to see what the guys are, the guys that are, they're in relationships, they're having babies. I can't imagine how much pressure they're under to buy a house. Could you imagine renting a small place or something like that? And they're like, hey, we need to either rent a house or go buy a house. And that's where you get into a difficult situation of what you want to do. Because if you're currently renting a 2-bedroom apartment, that's not a big deal if it's you and your wife or your girlfriend or whatever. But if she's going to have a kid, now it's like, okay, this is going to get a lot tighter. You might make it work, maybe. But then if you have a third kid or something, she's going to be on your butt to be buying a house. So I think a lot of this is going to be driven by the demographic and the age of the demographic and having kids, and then the pressures on the family unit to buy a house becomes quite immense after you have kids, or even before, like right when you're having it. What does it mean to be rich in the United States? It says U.S. median net worth breakdown. Lower class is $6,000. Lower middle class is $43,760. Middle class is 104. Upper middle class is 201, and upper class is 608,000. Do these numbers surprise you? Put in the comment section if you think those numbers surprise you. I would have not have guessed that upper class was 608,900. I would have guessed something over 1 million. That was my take on it. Upper middle class, I would have thought was 600,000, and then middle class would be like 300,000 or something like that. And then lower middle class, I would think would be like 100 grand, and then lower would be like 10, 20 grand or something. That's my guess of what this would be. Eric says oil down $3 on a potential U.S.-Iran deal that would allow Iran to export 1 million barrels per day. Guess what? The oil is already flowing anyways, and these are just the official observable barrels. Can anyone tell the algos? Yeah. Here's Tavi. He says the multitude of macro drivers supporting the onset of another gold cycle is truly remarkable. Amplified by the prevailing skepticism surrounding the metal, we are arguably experiencing the most important time in gold's history. The stars are aligning, and it appears to be only a matter of time until we see a major breakout from the recent triple top formation, which is this little top over here. So it's these guys hitting it. And this is all of the different areas and we'll say supporting things for gold to go higher. Falling gold production, central banks accumulating gold, government debt at historical levels, unsustainably high fiscal deficits, gold to S&P 500 near all-time lows, G7 economies entering a manufacturing revitalization era, rising deglobalization trends, the onset of inflationary regime, 60-40s looking for haven alternatives, lack of new gold discoveries, ultra-capital conservatism by major miners, the trifecta of macro imbalances, debt problem of the 40s, inflation issues of the 70s, and asset valuation imbalances of the 20s and 90s. That's all tailwinds for gold. And yeah, I do think gold's going to be going higher, definitely. Name one commodity better fundamentals than uranium at this moment. Well, I mean, we've got fundamentals and then we've got the valuations. The sectors that I like, and it may not be better fundamental wise, but from a value perspective, platinum looks very good, but so does uranium. And so does the gold and silver mining companies. They all look very cheap. But cheap does not mean that you have better fundamentals. It just means it's cheap. I do think that uranium, especially seeing SWU take off vertically, I think that U308, looking at where it's at, is moving on up. And I also think that the uranium equities are cheap and they'll probably move up and follow with it. So I don't think there's anything at this current moment that looks better than uranium myself. I think that looks like an incredibly good sector, and especially looking at that sector. Heavy truck sales continue to increase. Before the past 7 recessions, we saw this decline well before the recession started. You want to talk about leading indicators of recession? I'll take this every time. Yet another clue to recession is imminent, like we keep hearing. I don't know if I covered this last time, but it is way up there for heavyweight trucks. But I'm going to end it there, guys. That's what I've got for today. I think that I went over that one last time. Yeah, kind of interesting to see the wealth building stuff and where they put those lines in the sand. I would have put them a little bit higher for some. But yeah, that's what I've got for today, guys. If you like the content, give me a thumb up. Subscribe to the channel. Subscribe to the website if you'd like. And we'll catch you guys later. This is Finding Value.